This is the InvestorConnect podcast series from Hall Martin, episode number 26. Some investment strategies as Hall Martin interviews Mike Troy from geekdomfund.com. In this episode of Investor Connect, Hall Martin interviews Mike at geekdomfund.com. From the beginning of the episode, where we have a description of the beginning of geekdomfund.com and its strategies, Hall Martin views into the background of Mike when he was at the IBM Services and Consulting Group, then with a startup in San Antonio, Texas, and then started raising funds up to and more than $3 million in that area. They discuss mainly the criteria for investment in what is called fertile areas in the South Central Texas area and other spots. This includes the staging of the firm and the quality of the entrepreneur as key criteria. Also, why the focus should be on better sales strategies of the groups and how they can ensure that the real problems that the firm are dealing with are being solved with realistic pricing. That is, not underpricing just to get the business. And also, it ends with the unique value that's going to be delivered to customers by the firm, not necessarily based on intellectual property alone. Then Hall goes into the use of big data. They discuss how there's a need to see some sort of applied use of that data, which cannot be replicated by competitors. It's just not the size of the data, but the quality and the application. Then they finally discuss applications with data, with automation, with preparation, case studies. The key thing is the difficulty in finding the traction and, what Mike says, get going. The contact information is available on the show notes, as well as information about how to contact Mike. That is, Mike at geekdomfund.com. Now, please remember that this podcast series is called Investor Connect, with interviews with Hall Martin, and it used to be Angel Connect. What happened is that they're broadening the scope to include more of the investment environment. And a small note, Investor Connect is a program under the Texas Open Angel Network, which is a 501c3 nonprofit dedicated to the education around startup funding. Hall Martin is the principal contact, and he can be reached at www.investorconnect.org/contact. Now, let's get to the interview where Hall Martin discusses with Mike Troy the strategies and also the ideas and examples, as well as case studies of geekdomfund.com. Let's listen in.
Maybe you can start by telling us a little bit about yourself and how you got into this as well. What's your background?
Sure. So I have a technical background. I started my career coming right out of college and going to work for IBM back when they were still a hardware company and had just started to shift into making the move to a services company. So I was hired into the IBM Consulting Group at the time in their SAP division. There were about 30 of us when I was hired. That grew over the next 4 years to something like 1,600 people in that division, and they were trying to hire another 1,000 more. So it was really sort of an interesting time to be at IBM with the explosion of the services division and that providing a significant portion of not only the revenue, but a very significant portion of the profit of that company as it kind of shifted into sort of a very different type of company at that time. So how I got into this, I guess I would say it had a large part to do with where I was. So I ended up marrying a woman from San Antonio. I'm originally from the Bay Area and went to school out there. Ended up marrying a woman from San Antonio who really, after having a few kids out in California, was looking to get back home. We moved back to San Antonio about 7 years ago, and it was really like an interesting time to arrive in San Antonio. So I had a startup of my own at the time. And when I asked people, like, where do the startup company's office in San Antonio, there really was no answer to that question. I got everything from blank stares to people telling me to go out to the medical center. But as it turns out, I think there was actually quite a bit of stuff going on in San Antonio. We were just, everybody that was doing something interesting was sort of scattered to the four corners of the city. And it wasn't until Graham Weston and Nick Longo really started Geekdom downtown and letting it get kind of a foothold in, Graham's Weston Center office building downtown that, some of these companies that were spread around started to coalesce around like one geographic location, which quickly became sort of the center of the startup universe in San Antonio. And originally, when Geekdom got kicked off, I think Graham realized that they were going to need a little bit of money to get things going. And so Graham and several of the other Rackspace founders and executives put a little bit of money into a pool, and then they asked a group of us to basically distribute that to companies that were officing at Geekdom. So they had a small fund, and we distributed that money to either you applied, there was sort of an application process, and then you came in for an interview with the board, and if you were successful, you got a $25,000 investment. So that was it. It was a very binary decision. There was only one amount of money we could distribute, $25,000. It was either yes or no. And there were a lot of restrictions on who could get that money. You had to physically office at the Geekdom facility. You had to be an active member of the community, et cetera, et cetera. So we deployed that first fund, a group of us, and when it was gone, Graham came back to us and said, well, what should we do? Should we top this fund off again? But it really seemed like a number of those companies that had gotten that initial $25,000 investment had really gone on to do some pretty amazing things with that money. They had leveraged that money and built a prototype or an MVP. It got some customers or secured some early investment. One of the companies got into Techstars program. And so it just kind of felt like that fund had served its purpose for that time. But really, if we wanted to sort of continue to support these companies, we were going to have to raise a larger fund. So we ended up raising our first fund. So a group of us that were on that board distributing that money basically went out and decided to raise a larger fund. And so we raised our first fund, which was still very small, I think, by industry standards. It was about $3.4 million. And we made 23 investments out of that fund. We had none of the restrictions that the previous fund had, so we were free to invest wherever we could find a good company to invest in. Although we tended to be fairly geographically concentrated, at least in terms of the majority of our companies. So about a third of those companies were in San Antonio, about a third were in Austin, and a third were elsewhere. But of the third that were elsewhere, I'd say probably about half of them came through one of the two Techstars programs, either in San Antonio or the cloud program in San Antonio or the Techstars Austin program. So when we fully deployed that one, that's when we went out and raised our second fund, and that's really the fund now that we are investing out of. It's a much larger fund, and so we're looking to expand our reach out beyond San Antonio and Austin, beyond those two Techstars programs. We're really looking, we still see Texas as a very underserved market from an investment standpoint, and so we're looking to get out and bring in more deal flow from Houston, more deal flow from Dallas, as well as kind of continue to recruit heavily in sort of the San Antonio and Austin markets.
So as you expand out, how does your criteria for investment change or evolve to take in the increased territory and probably the growth of the community? What's new and different from what you said before?
I don't know that our requirements have really changed tremendously. I'd say the one thing that obviously having a larger fund is going to enable us to do is to participate in later stage deals. So the first fund, the average investment size was somewhere around $130,000, which primarily restricted us to very early stage companies. So now that we have a larger fund, we can deploy larger amounts of capital. We are able to participate either in more follow-on rounds or even some Series A rounds and things like that. I think the requirements have not really changed. I think that over time, I would definitely say that we have a better sense of what type of company we are looking for, what type of company we can be more helpful to, and so I would say that tends to be, we are a lot more focused on at this stage on B2B companies, almost exclusively. I say that it just seems to be something that, like most of the 4 partners at the Geekdom Fund, that is an area that we know, we came from, we understand. So for consumer products, B2C type products, we are, we never say never. We may take a look, but we're just really not able to help those companies as much. So we're much more interested in B2B enterprise software companies, SaaS companies.
So for companies coming in, of course, you're providing a great service and tremendous mentorship. What do you end up spending most of your time on for these B2B companies? Where do you find that you spend a lot of effort to get them up the curve on it, or what could they do better at when they come in the door?
I think a lot of it depends on the stage of the company and also the experience of the entrepreneur. With a lot of first-time entrepreneurs and younger founders, we tend to focus a lot on basic blocking and tackling. Corporate governance, how to get your company set up right, making sure you're not really making any mistakes. For people that are a little bit further along, I think we tend to focus a lot on sales. What we've seen from our portfolio companies is the ones that develop better sales strategies and have an idea of really how to structure a sales and marketing team, and specialize even within that group in terms of like which channels they're going after, their channel partners or inside sales departments. Those are the ones that tend to grow a lot more quickly.
Well, I know some investors who, after looking at the product or the team, the one thing they focus on is the team's ability to sell. Can they really sell their product? Because a lot of people are making cloud-based, web-based tools, and the chance that you'll get that up and running is pretty good. It'll get up and running, we're sure. But the real question is, can you really sell it? Will somebody put dollars on the table? What's your take on sales experience? Where do people really need to have good sales acumen for cloud or web-based or B2B type sales?
Well, I think there's sort of that's a big question. I think there's a lot of different parts to it. I mean, one of the first things that we look for, Hall, is just to make sure that someone is actually solving a real problem. And I think there are a lot of SaaS products that are out there that are solving, quote, problems. But the issue that we find is that if this is really not like a top priority problem, like let's say a top 3 problem in someone's enterprise, you're just going to have a tough time getting anyone's attention, because usually those number 1, number 2, number 3 problems are the ones that people really want to focus on. I think a second thing that gets overlooked a lot is pricing. I think we see, especially a lot of SaaS products, we feel are just continually underpriced by entrepreneurs, which has a few real drawbacks. So I think we fully recognize the fact that a lot of times to get those initial customers, you need to cut them a deal. But when you're coming to the market with a product that you are claiming is better, faster, and cheaper, I think it actually, in a lot of cases, it starts to create some confusion in the marketplace in terms of like, wait, why are you cheaper? If you're better, faster, or, have more features or solve this problem in a different way that's more effective for us, like, you don't need to be cheaper. You may need to give your first customers like an incredible deal to take that risk and sign up with you being a startup, but in the long run, we think that like underpricing your product really hurts you, and it really hurts your ability to have the right sales team, to properly incentivize those salespeople to run the type of marketing campaigns that you need to run.
So how do you coach people on setting the price? What do you tell them they need to do in order to find the right price? Because I see that a lot. People say, well, I want to sell as much as I can, so I'm going to drop the price so it's not a barrier, they'll say. Although sometimes that gives the impression your product is probably not worth as much as it really is. So it can be counterproductive too. But how do you find the right price?
Gosh, yeah. I mean, that could probably be a podcast in and of itself. I mean, I think some strategies for sure is like we encourage people to discount heavily. So go ahead and tell them what you're thinking about charging, and then offer them a huge discount to come in up front. So something that immediately in the minds of the people that you're talking to early on, let them know like what you were thinking the value of this product is. And then I think you really have to get in there and you need to focus on your different customer segments. It's amazing what different customer segments are willing to pay for a product. It can vary considerably. So to the extent that you can focus and really go in there and try different prices, don't be afraid to talk to someone about a big purchase price, and then have the comfort to know that if you need to get somebody in the door, you need to have somebody buy early on and sort of take that risk on a startup versus maybe a more established provider. Go ahead and give them a big discount, but don't avoid that uncomfortable conversation up front about really what you're thinking this is worth.
Okay, it's good feedback as well. So aside from sales, what do you usually see in the deal flow? What's kind of the next big challenge you find among startups coming through your door? Because I agree, I think we have a lot of great companies in Texas, and there's just not enough funding going around. But at the same time, you want to make sure those companies are fundable, and getting them up the curve, getting them mentored into a place where they can take the funding is a key aspect as well. What do you see out there in the market today?
There's a few things. I mean, I think one of the most challenging things to find as you're sifting through large amounts of deal flow are really, truly big ideas. People that are solving big problems in big markets that have a shot at becoming really big companies. And another thing that we look for very closely is some sort of either industry expertise. It can be somebody that solved their own problem. I mean, something that's providing some kind of a unique insight to this entrepreneur that he's approaching it in a different way than everyone else. There are so many products out there that seem to be doing, 80, 90% the same thing. It is very difficult, I think, to reach out and find somebody that's actually truly doing something that no one else is doing right now.
Okay. So, big market, big problems to solve, unique angles into it. Those are the things I guess you guys are looking for, and that's what gets you excited about one company over another.
True, and I guess there's one more I should add in there is some sort of defensibility. And that does not need to be intellectual property based, and frequently never will be in the types of stuff that we look at, but just something that either you have a unique solution, a unique ability to provide it, high switching costs. Once you're in there and someone's using you, a high switching cost to get out is certainly a defensible position. Great partnerships, those kinds of things. I mean, something that's just going to make it that much more difficult for the next person coming along to eat your lunch.
Right. That's a good point. Patents really don't do much in the software world. They take 3.5 years to go through, and by then we're on completely different systems at that point, and nobody's going back to the old one. So usually I find things that have large data sets can often be a tremendous competitive advantage. I've got lots of data in here that is hard for somebody else to replicate or duplicate. If it's an algorithm or a piece of code, that can be easily redone, but large data sets can be hard if you've got access or have spent substantial time pulling it together. What do you guys think about data as far as that being a new type of play? You hear a lot about big data and data plays and so forth, but what's your take on that?
I mean, it's certainly very interesting. I think there are a lot of companies that are starting to come to market now that are using data in a lot of interesting ways. I think what we're really looking for is some sort of applied use of that data, because I agree with you that data can be a huge competitive advantage and provide a lot of unique insights into the way a company or market or something operates that can make it very difficult for somebody to come along and just reproduce what you're doing. So we're really interested in it. We have a couple investments that are in the data space. I think that one of the things that people are going to have to start grappling with is just the size of the data that everyone is using now. People are going to have to get comfortable working with extremely large data sets. A lot of the machine learning and AI algorithms are incredibly compute intensive. So we think there's a lot of interesting plays in the data space. I'd say that we are particularly interested in ones that are applied against specific problems or specific industries.
Well, how large are these data sets, and how do you manage that? Obviously, it's cloud-based of some kind, but somebody wants to get into a data play, how much data are they going to have to deal with, and how do you manage it?
Well, I mean, that really depends as well. And I think for most people, the answer would be as much data as they can get their hands on. Just going back to what we were talking about earlier, but I think a lot of that data providing people with some sort of competitive advantage, how it gets managed, and there's a variety of sort of technical answers for that. But I think that, increasingly you're starting to see, data scientist is one of the positions in portfolio companies that is probably most sought after, at least when we see sort of our monthly reports or quarterly reports come from our portfolio companies, and asks in terms of help hiring data scientists always seem to be at the top of that list. So I think there's a real demand for that skill set, at least here locally, say in San Antonio and Austin.
Cool. Well, there's certainly a lot of new applications coming up. There's big data plays. There's a lot of fintech opportunities coming up. We see a number of cybersecurity plays coming into the investor interest. Artificial intelligence, which is a type of data play, is starting to come into use in a lot more companies we see coming through. And then there's just a number of other sectors that seem to be getting a lot of traction. Aside from those, are you seeing any other segments that are getting a lot of interest there?
It's interesting. The market that we're in, it's very difficult to specialize as highly as somebody like in the Bay Area or maybe one of the larger markets like New York or LA can focus. We tend to see a little bit of everything. Beyond the obvious things that we're seeing in terms of, SaaS companies, one trend that we have seen, and I think it's only going to accelerate over time, is, we tend to see people coming up with products or services or companies that are attacking very established markets. And so I think that this is something that we are going to see more and more of. We're going to see more and more companies coming up that look perhaps less like a technology company on the surface and more like something we're more familiar with. I think like an obvious example of that would be an Uber, that at the end of the day might look more like a taxi company than a technology company. For a taxi company 10 years ago probably wasn't thinking they were going to be disrupted by a technology company, and yet they are. So I think we're going to see technology enabling sort of old world businesses to operate in new ways and create, competitive advantages that allow them to be very disruptive.
Well, you see that a lot where companies are moving into a service mode, and then later they move into a technology mode, of course, for scalability and pricing and all kinds of reasons. And so it seems like that's the natural evolution of groups that want to be more than a lifestyle business. You want to be a lifestyle business, that's great. Be a taxi company. You want to be a growth business with real scalability, you move to the technology side of it for sure. Yeah, have you seen any good examples of that recently?
Yeah, we have a number of portfolio companies, I think, that are sort of representative of that. For example, we invested in one company out of San Francisco called Benchmade Modern that builds custom furniture by the inch delivered to you in as little as 7 days. So I think at the end of the day, is kind of a furniture company. However, it's new technology, manufacturing techniques, direct-to-consumer sales models that are all sort of bundled together that are allowing them to produce something that otherwise would take, a normal furniture company 12 weeks. And also, I think they have a considerable advantage when they're building something from scratch and they're not dependent upon old ways of doing things or distribution models or that have been established over a long period of time. At the end of the day, one of the most difficult things to disrupt is yourself or your own operations. And so I think a lot of new entrants have an inherent advantage in that category.
That makes sense. So that's a neat application as well. You see a lot of what you would think of as old world industries getting a whole new life with an injection of technology, 3D printing, and even newer manufacturing techniques coming in, enabled by robotics and so forth.
Sure.
Take a new spin on an old problem. It's great to see those come out.
The Internet of Things. We have another portfolio company, Parlevel Systems, that basically puts a small telemeter inside of a vending machine, and now that vending machine is on the internet. So rather than someone who used to manage their business with clipboards and send drivers on routes that, on a Wednesday they would visit these 40 locations and sort of run in and see what's in the machine, what's sold out, go back to their truck, stock up a box, bring it back up and fill the vending machine. Now they know they can flip open their iPad or their phone and they can see exactly how much stock is in the machine. They can dynamically route the drivers to the machines that need to be visited and skip the ones that don't. They can optimize their product mix based on what's selling best in particular locations or at particular times of the year. They know exactly how much cash that driver is supposed to be bringing back. They can pre-kit him a box that is ready, that has exactly what the vending machine on the 6th floor of that particular office building needs, so that person becomes much more efficient and is able to visit about 30% more machines in a given day. So just, there's a lot of interesting stuff like that going on that we think is only going to accelerate the time. I think it's a really, I don't know if you're familiar with Bitfusion up in Austin. I mean, they're doing sort of like high performance computing and they are working, their partnerships are off the chart incredible in terms of who they're working with, but there's always seems to be that, when you can do anything, it's almost more difficult to kind of find that traction and get going. It's not like, oh, we're, like Fashion Metric, we invested in up there. Sorry, not Bold Metrics, but and they're doing sort of big data for the fashion industry. Like that is like for sizing in the fashion industry, like to reduce your returns, and they'll go in and they can analyze your sizing charts and they can say, hey, we think we can cut down the returns of your medium-sized T-shirts by X percentage if you cut them more like this, because they're starting to see across multiple vendors, like what the different returns are, what the sizing is. Like that is very interesting and very compelling. You can walk right in the door of a, Banana Republic or J. Crew or something like that, and you have a compelling pitch. Whereas if you come in with this sort of generic solution, as exciting as it is at a big, big level, it's just like harder to find those people that are saying, I understand what you do, and like this is really for me. I think there's a big advantage to just at least being narrow, even if you've got a broad-based solution. It's what you always hear, focus. And I think that's not just about don't build 3 products at the same time. It's focus on, focus your message, focus on a particular customer segment. It's amazing, and I'm sure you've seen it, just how big some industries are when you really dig into them. There's another fund here in town, Fraser McComb, and you would think they focus on the auto industry, and if you talk to them, they're like, oh, hell no, the auto industry is too big. We focus on like these 4 areas within the auto industry because otherwise it's just, we're all over the place. And that's all within the auto industry, which is like to a lot of people that in and of itself seems pretty well focused. But, for somebody that's actually in there and understands it, even that's not focused enough.
Well, that's cool. That's a cool application. Well, I appreciate you taking time and telling us more about the Geekdom program and where it's come from and where it's going and all the cool things you guys are doing, and appreciate all the hard work you are doing, getting entrepreneurs funded and educated and mentored for going to the next level. Were there any other closing thoughts you had about the Geekdom program that we should make people aware of?
Yeah, I mean, I guess other than just, we're actively looking for early stage investments, so feel free to reach out to us. My email is just mike@geekdomfund.com. And we'd love to meet up with you, especially if you're here in the Texas area. But even if you're not, we'd still like to hear from you.
That's great. We'll post that in the show notes as well. And those who are interested, I guess, send you an exec summary, and you'll follow up with them. It sounds like a great opportunity to get some feedback as well.
Yeah, definitely.
Cool. All right. Well, very good. Well, thanks so much for taking time, and we're looking forward to seeing what great things Geekdom brings to bear, and appreciate you taking time here.
Okay. Thanks, Paul. Good talking to you.